where we've got most fund managers and investors closing their positions for the year. Some saying a drifting lower of these markets is pretty much what's on the cards for the road ahead, despite the break in momentum we saw yesterday. Is that what's more to be expected in your view? What's your outlook for what's left for this year?
Thank you very much, Alishia. I'm happy to be here. I think certainly the expectation with our market is normally that as we come to the end of the year, as with many markets, as you go into the festive season, people begin to change their priorities, and investing or saving, if you like, ceases to be a primary priority. But I think so far we're seeing a slightly stronger finish to this year, and it was just reported the other day that over the whole year, 2010 has been a very strong year for this market. So I think you may see that trend somewhat defied, and I think it's looking like a fairly strong finish to the year, but it will peter off just a bit.
In particular, we've got value investors showing keen interest on blue chips, East African breweries, KPLC, KCB as well, and that offering somewhat of a floor, it seems. So are we looking at broad-based interest here or pretty selective interest?
I think that is an accurate observation. I think the first thing to note is that the market really hasn't had too much in terms of a structural market event like an IPO or a rights issue prior to this to really pick up interest. I think the last we had was KCB, which was fairly successful. Looking forward now to KPLC in the month of December, and slightly off the market you have Deacon's Kenya, which is in the market looking for funds, albeit not as a listed entity. So I think with that, you will find people beginning to look for those value offerings that aren't as exciting but offer some stability over this transitional period going into 2011. That's shaping up to be quite a strong year, and I think there's a lot of people taking bets already on how that year is going to pan out.
Let's hone in on KPLC. We've seen an announcement that it's priced its rights issue at 19 shillings 50 for each new share. Your response to that, because we knew that we were looking at a price of anywhere between 14 and 20 shillings.
I think my issues with the KPLC rights issue continue to really be about how effectively they're going to be able to deploy the funds they receive and improving their product, really. I think it's been a strong performer, but we have to remember that KPLC is a monopoly, it's a utility, so it really is. Its revenues are ring-fenced, its position in the market is quite ring-fenced. And really, I think what we are hoping to see is KPLC emerge as a much more competitive outfit, even as a monopoly, and raise the standard of their offering. So I think the price is fair, and it was within expectations. But I think more interest will be paid to really how they deploy the funds as is expected once they receive them.
Does the same hold true for a player like KenGen? I mean, we've seen much market exuberance surrounding a stock like KenGen. It rallied close enough to 3% yesterday, and on the back of the fact that this is a utility receiving 4.3 billion shillings from the German government development financing arm to boost its generation capacity.
KenGen is a very interesting stock. I mean, over the past 2 years, it's been able to attract significant capital. First, they had the landmark bond for almost 25 billion that, remember, they are still holding. And then there's the ability to continue to attract investment that they have shown. I think the question really is how quickly, once again, similar to KPLC, remember, investors are looking for a return. So having rewarded the company with so much capital, people, I think, would now begin to see how well they can wait out and see when the returns begin to come back in. I think the interest we are seeing is still pegged on the horizon projects they have going into 2012, 2013. But I think KenGen would be careful to ensure that they don't wear out the market's patience in being able to bring a return back to the market.
Just looking at BAT Kenya, we saw that counter trading pretty flat for the most of yesterday's session. But after the close, having announced a dividend of 3 shillings, we know that investors are used to this counter as a high divvy payer. What did you make of that announcement, and what do you anticipate market reaction to be today?
BAT is one of our perennial blue chips. It's a company that's weathered quite a few storms, particularly with a fairly hostile regulatory regime towards anti-smoking legislation. But somehow they appear to have been able to come through. And I really think the dividend would have been expected, the interim dividend, and it is a nice Christmas present for people who hold that stock that really doesn't change hands too often, and which really explains why its price, when it does move, does tend to be fairly volatile in layers. So I think not many surprises out of that counter, and I think the investors that do hold it will be happy to receive their early Christmas present.